Good morning, traders. Welcome to the Phoenix Blue Morning Update on Monday, the 7th of March. Today we're going to be focusing on non-farm payroll and what happened on Friday. And we saw some big numbers, but it didn't give us the market direction we anticipated. So let's go over and have a look at that straight away. Right, first off, here's the numbers. Non-farm employment change, the prediction or the forecast was 195,000 increase. The figures that came out were 242,000. That's a 24% higher figure than was forecast. Figures of that magnitude would normally leave an expectation that that's going to give the market a lot of direction, that it's going to really enforce the dollar strength we were already seeing. But what we actually saw, and these are 5-minute charts just so you can see how the action unfolded, was yes, the initial reaction was dollar strength as we anticipated. But interestingly, at this same time, we were also watching the Aussie because we had an entry or an open trade on the Aussie, and the Aussie moved the opposite direction against dollar strength. So that should, if you were watching this live, that should have immediately raised alarm bells and made you think, well, there's something amiss here. Now, probably what was amiss more than anything was this: the average hourly earnings coming in well below expectation. They were forecast to increase by 0.2%. They decreased by 0.1%. Now, when I read into this later, the way that this was actually understood was that, yes, there was an increase in the number of jobs that were created, but the problem was these were low-income, part-time type jobs rather than being quality jobs. So it's not always the headline number, but that lies behind that can be the reasoning. That's not to say that we're in a position to react fast enough to that, but we need to make sure we trade in a way so we don't take any risks or any excessive risks. Through this period, we had 3 trades on the table. We had Euro, Pound and the Aussie. We hit our T1 target on the Euro and the Pound on this downward movement here. We put our stops to break even. We made half our risk. When price came back, it stopped us out at break even. So the net result of those 2 trades was we had made 1 times our original risk profit, even though the market had turned against us. We didn't see that on the Aussie because that didn't make it. It did spike down slightly. It didn't make our T1 profits, and we were stopped out on that trade. But the net result was a positive for the day. Now, what this does is highlight the way that we trade, even when we're wrong, or if wrong's the right word, because we have a small target for our initial trade. We move stops to break even. As long as we get that movement, we get to T1, we make money on that particular trade. When we're trading, I mean, this is obviously specific to non-farm payroll, but when we're trading normally, we trade really strong levels that we identify as being the levels that the big players and the banks buy and sell at. So again, even if we're wrong, we expect a reaction, and we will have a T1 target potentially within the scale of that reaction. So we take some money, we move the stops to break even. So even when we're wrong, we can still make money. Okay, going on from that non-farm, then we'll have a look at the news announcements for the week ahead, and it's really, really busy. I'm going to start down here with the big announcements through the week and then look at today after that. We've got 3 central bank announcements. On Wednesday, 3 p.m, we've got the Bank of Canada overnight rate statement. We've then got the Reserve Bank of New Zealand cash rate statement and press conference. And then to cap it on Thursday, we've got Mario Draghi with the Euro minimum bid rate and the ECB press conference that follows. So we'll be talking about these events through the week, but whereas non-farm payroll didn't give us the dollar strength direction we anticipated, We potentially will be looking at all three of these announcing additional easing or giving indications of their desire to decrease the value of their currency, which should play back into the dollar strength scenario. But we will obviously wait and see that play out. The other thing, big thing that's in this week is Chinese data. We've got the trade balance overnight tonight. And then on Wednesday night, we have the CPI. And then over the weekend next week, we have industrial production. We know there's been a big focus for us on the Chinese economy, certainly through this year and even the back end of last year. So we'll be, again, talking and looking about that on an ongoing basis. On to today's news. Well, we've had one piece of news overnight, which was the Kuroda, the Bank of Japan governor, who made a statement and basically said that further monetary easing is possible. He stood his ground and said what they'd already done in terms of negative interest rates was having the desired effect. But we know from where we've seen the yen pair, we've seen Bank of Japan intervention already, and we will look at that same level for intervention going forwards. Other things through the day, we've talked about this before, be aware of any central bank speeches. Here we've got two FOMC members speaking, and then there's a Reserve Bank of Australia speech there as well. If you're in these trades, particularly if you're intraday, there will be potentially much more volatility around these than is normal. Okay, so a lot of news to look forward to this week, and we'll be dealing with it on a day-to-day basis. But now let's just go over and have a look at the Asian markets and what's been happening overnight. Not a great deal to report on the US dollar Chinese yuan exchange rate. Slightly bullish day, but following the strengthening of the yuan through last week, not hugely significant. The Shanghai Composite, we've got a gap up at the time this was taken. We're in what let's call positive territory. We're above the 2015 lows, which is this level here. Over on the Nikkei, we had a strong week last week, took us way above the 2015 lows. Overnight we've had a negative engulfing day, but we'll still be bullish on this equities market above these 2015 lows. Over to the US dollar. Well, we saw this move through 97.50 last week. We interpreted that as being dollar strength. Dollar pullback pre non-farm payroll, which was not unexpected, and we expected to see the figures for non-farm coming in strongly, which they did, and producing continued dollar strength. As we've already discussed, that didn't happen, and the dollar's now formed back into this zone that I've marked here, which is 95.50 to 97.50, and I'm calling this a dollar neutral zone at the moment. I don't consider we have trading direction from the dollar. We don't have dollar strength or dollar weakness until we're above 97.50 again, or until we break these lows at this level if we were going to go to dollar weakness. So what are we going to be trading this week? Well, there's not a lot immediately on the table because of the uncertainty. What non-farm told us was the markets are extremely nervous and uncertain in themselves. We talked about through a non-farm where the Aussie dollar went long against expectation from almost the moment that the figures came out. We're looking to take advantage of this here because this is the level at the trade that failed. It broke through that, hit our stop loss, we took a loss, but now we've got a daily close above that level. We're looking for a retest back to that level, and our T1 target here taking early profits before we get back to the high. Stops at break even, so we've got no risk. We'll then wait and see whether we're in a position to take advantage if we get follow through. We've nothing to lose if it comes back and stops us out, and we may then again change our view in the direction of the Aussie at that point. Conversely, on the Kiwi, the New Zealand US dollar pair, very strong level here. You can't see it all here, but over here historically, this is the big weekly level. A lot of supply and demand, support and resistance. We're simply waiting for price to come up to this level, and then we'll trade it short. We've got this early T1 target here, as I've already discussed, so we can, even if we're wrong, we potentially make some money off the reaction off this really extremely strong level. But also we are aware that on Wednesday we have the Reserve Bank of New Zealand statement, so we'll be looking for this trade to trigger before that. If it doesn't, we will cancel that trade before the announcement, and look for that to play out before we look to get into that market again. Gold was an interesting day through FOMC. This is the weekly of gold, but actually through, sorry, not FOMC, I always say that, through non-farm payroll, gold reached a new high, so that was again to be unexpected. We have got here a signal from the Commitment to Traders report that tells us there is a top approaching. So our bias at this moment in time is short. We are looking for a pullback, and we're looking for a pullback in the first instance to around this 1190 area here. Had we not had this move on Friday, we might have been looking for a level further down for the pullback, but because gold's came through non-farm payroll bullish, we will be looking to get back in here more aggressively around this level here, which, as you can see, is a nice level through there on the weekly. Okay, so that's everything for today. If you want to know more about how we trade, how we can improve your results, how we can actually, as I mentioned earlier, potentially be wrong and still make money, please do email us at info@phoenixblue.co.uk. You can just have a chat with us, or you can come and see us without commitment. If you've got any specific questions about this video, I'm at tom@phoenixblue.co.uk. Okay, that's a wrap up for today then, and I look forward to speaking to you again through the rest of the week. Thank you.